Good evening, ladies and gentlemen, and welcome to tonight's comprehensive business and finance briefing. Tonight, we turn our focus to International Business Machines Corporation, better known as IBM, a company whose legacy spans over a century, yet continues to navigate the fast-evolving landscape of enterprise technology, hybrid cloud solutions, and artificial intelligence. Recent developments surrounding IBM's stock performance, earnings reports, and analyst commentary reveal a company at a critical crossroads. Investors, market watchers, and business strategists alike are scrutinizing the company's strategic initiatives, technological innovations, and competitive positioning in an increasingly complex market. Tonight, we break down what this means for IBM, its shareholders, and the broader tech ecosystem. IBM's stock performance and analyst sentiment. IBM stock has been making headlines recently, with a notable surge of 7.86%, bringing shares to approximately $307.46 in the latest trading session. This increase is the result of several factors: strategic acquisitions, strong infrastructure performance, and analyst upgrades that reflect renewed confidence in the company's long-term prospects. Bank of America, for instance, has revised its price target for IBM from $310 to $315, maintaining a strong buy rating. This upward revision reflects confidence in IBM's core business strategy, especially its hybrid cloud and AI investments. Similarly, CFRA has upgraded IBM to a buy, highlighting the company's robust fundamentals and the potential for significant upside as it executes on its strategic initiatives. Market analysts note that while IBM's stock has experienced volatility in the past, these endorsements signal a growing optimism among institutional investors. It is clear that IBM's trajectory is being closely watched, particularly as the company seeks to capitalize on emerging opportunities in cloud computing and AI-driven enterprise solutions. Financial performance, earnings, and revenue insights. IBM recently reported quarterly revenue of $16.33 billion, exceeding analyst expectations. This strong top-line performance is largely driven by the company's infrastructure business, particularly its mainframe segment, which reported a 17% increase in revenue. This growth is largely attributed to robust demand for AI-enabled mainframe systems that support critical enterprise applications. However, IBM's software division, including Red Hat, its flagship hybrid cloud unit, experienced slower growth, with revenue expansion decelerating to 14%, down from the previous quarter's 16%. Analysts warn that continued underperformance in this division could pressure IBM's overall revenue growth in 2026, especially when measured at constant currency rates. Despite these concerns, IBM has raised its full-year revenue growth outlook to more than 5%, up from the previous guidance of at least 5% at constant currency. The company attributes this optimism to a combination of infrastructure strength, AI adoption, and strategic positioning in high-demand enterprise sectors. Financial experts emphasize that IBM's revenue profile is increasingly weighted towards high-value, high-margin segments such as AI and hybrid cloud services, suggesting that even if software growth moderates, profitability could remain strong. Strategic investments and technological leadership. IBM has consistently invested in expanding its technological capabilities. Between 2020 and 2024, the company allocated substantial capital to infrastructure, cloud integration, and artificial intelligence development. One of the most significant moves has been IBM's $6.4 billion acquisition of HashiCorp, a company specializing in cloud infrastructure automation. This acquisition strengthens IBM's ability to provide enterprise clients with scalable, secure, and automated cloud solutions, critical in an era where digital transformation is accelerating globally. In parallel, IBM has expanded its AI portfolio. Its AI business, now valued at $9.5 billion, is driving innovation across sectors requiring strict data security and compliance, such as finance, healthcare, and government. IBM's AI solutions integrate seamlessly with hybrid cloud environments, enabling enterprises to analyze, automate, and optimize operations at scale. Jeff Smith, a senior technology analyst, notes, IBM is leveraging its decades of enterprise expertise to transition from a traditional IT provider to a hybrid cloud and AI powerhouse. This strategic pivot is critical for sustaining long-term growth and capturing emerging market opportunities. Analyst perspectives and market context. Analyst sentiment on IBM is mixed, reflecting both optimism and caution. On the cautious side, Morgan Stanley analysts point to IBM's software underperformance as a potential constraint on 2026 constant currency growth. They emphasize the need for software revenue to accelerate in order to sustain overall growth momentum. On the other hand, Wedbush Securities highlights IBM's potential in the hybrid cloud and AI space. They believe that IBM's ongoing investments, coupled with strategic acquisitions, position the company to capture a growing share of the global enterprise technology market. They also cite IBM's ability to cross-sell AI and cloud solutions as a differentiator against competitors such as Microsoft Azure, Amazon Web Services, and Google Cloud. Furthermore, market context matters. Global enterprise IT spending continues to grow, with hybrid cloud and AI adoption accelerating. As companies digitalize operations, the demand for integrated cloud and AI solutions increases. IBM's expertise, established client base, and robust infrastructure investments position it to benefit from these macro trends. Strategic implications for investors. For investors, IBM represents a unique case study. It is a company balancing legacy strengths, mainframes and infrastructure, with emerging growth drivers, AI and hybrid cloud. Institutional investors are taking note. 1. Revenue diversification. IBM's mix of infrastructure, AI, and software revenue helps mitigate risks from any single business line. 2. Strategic acquisitions. Purchases like HashiCorp enhance IBM's technological capabilities and market reach. 3. Market differentiation. Strong enterprise relationships and regulatory expertise give IBM an edge in secure, high-compliance sectors. 4. Dividend stability. IBM maintains an attractive dividend yield, appealing to income-focused investors. CFRA's recent upgrade to buy signals confidence in IBM's ability to execute these strategies and generate shareholder value despite market volatility. Challenges and risks. No analysis is complete without considering risks. IBM faces ongoing challenges. Software segment slowdown. Revenue growth below expectations could pressure margins. Competition. Rivals in cloud and AI, including Microsoft, Amazon, and Google, are aggressively expanding. Currency fluctuations. As a global operator, IBM is exposed to currency risks that could affect reported revenue growth. Economic uncertainty. Enterprise IT budgets may tighten if macroeconomic conditions weaken, affecting new deployments. Investors must weigh these risks against IBM's strengths and long-term strategic positioning. Conclusion: IBM at a strategic crossroads. In conclusion, IBM stands at a pivotal moment in its 112-year history. While challenges persist in its software division, the company's strategic investments in AI, hybrid cloud, and infrastructure provide a robust foundation for future growth. Analyst upgrades, including Bank of America's price target adjustment to $315 and CFRA's by rating, reflect cautious optimism in IBM's ability to navigate market dynamics. For investors, the company presents a blend of growth potential and dividend stability, offering both opportunity and security. For businesses, IBM remains a trusted partner in delivering secure, scalable, and intelligent technology solutions. Ladies and gentlemen, IBM's journey underscores a vital lesson in today's technology-driven economy. Success is measured not just by legacy, but by the ability to innovate, adapt, and execute with precision. As IBM continues its transformation, investors and stakeholders alike should watch closely, understanding that this company is not only adapting to the future, it is actively shaping it. Thank you for joining tonight's business and finance briefing. Stay informed, stay strategic, and remember, in technology investing, insight and analysis are the keys to long-term success.